Welcome to Cherry Street Investor Education with Kavitha Baratakke, passive income coach and founder of Cherry Street Investments. Education that is designed for you to take control of your financial life. Join us to learn how you can create multiple passive income streams, diversify your portfolio, save on your taxes, and much more. Become a better investor and fast track your financial goals. Here's your host, Kavitha Baratakke.
Good evening, everyone, and thank you all again for joining in for this webinar on creating a roadmap to financial freedom. Attaining financial freedom is an objective for most of us here, right? I believe all of us on this call today. That what does it really mean? It means that you have enough savings and investments to afford the kind of lifestyle that you want for yourself and your family. It means having passive income to support your lifestyle where you're not working for your money, but your money is working for you. That's truly our sort of holy grail, right? Like to get to the point where your money is working for you and you're not working every day for your money. I'm excited, really excited to present Elisa today, and I already gave you a big background about Elisa. So she is a multifamily investor and she has financially freed herself as the sole breadwinner of her family from her full-time job in technology. So today she's going to talk about how you can create your roadmap to financial freedom. So if you ever wondered how people escape the rat race in a very short period of time, or maybe in their early 30s or 40s, or wished you had a blueprint for figuring out your own journey to reach financial freedom, Elisa is here today from Easy Financial Independence University. She will share a lot of tips in this jam-packed session, so be prepared. She will share her own journey as well as a 10-step guide on how anyone can do the same thing in 10 years or less. So with that, I'm going to put some disclaimers. We're not presenting any, it's always educational purpose. You have to do your own numbers for yourself and apply whatever you're learning here. We're not presenting any investments, so don't worry about that piece. Just a few housekeeping rules. If those of you have not attended a Zoom webinar before and used to a call, you can't speak on this webinar. You'll be muted automatically. If you do need to speak, just raise your hand. I'll unmute you if needed. But usually we just ask you guys to ask questions in the Q&A box, and we handle it that way. If you guys want a more interactive session, I'm happy to set up another session with Elisa. She does a lot of workshops and stuff, but that will be something probably paid, which will be a longer workshop. If you have any questions, audio, visual, please let me know in the chat box ASAP so I can fix it. Also locate the Q&A box so you can ask your questions there, and don't type your questions in the chat box. It's just easier to track. Everybody asked me this. Yes, the webinar will be recorded and the link will be sent out by tomorrow within 24 hours today, right now. And to keep it from going to spam, please add my email to your contact list, because this happens every time when someone new signs up and I have to keep responding to questions. So please keep that open. Just a little bit about me. I am the founder of Cherry Street Investments. I focus a lot on passive investments in real estate, and as Elisa does as well. But I also have a realtor license, so I help people get actively invested in real estate in the San Antonio and Austin areas. Besides that, I do infinite banking. For those of you who don't know what that is, look it up. It's a wonderful concept. It allows you to invest through your life insurance policy into other investments, as well as provides a way for you to save for college and other things. So that's kind of what I do, and I focus a lot on education in these webinars are a part of this for me. Cherry Street is an education first company. If you are interested in looking at all the previous webinars we have done, it's on Cherry Street Investor Education. You can go look it up on YouTube. Every single webinar, and I do a lot of short videos. I recently did one on investing in Austin, so feel free to go look that up. And if you subscribe, you'll be auto notified of new uploads of content to this to YouTube. Also, upcoming webinars, just so you're notified, we are going to talk about investing in short-term rentals with Airbnb expert Sandeep Nanda. He owns over 25 Airbnbs and has done successfully, actually retired himself from his full-time job just with Airbnbs. So when someone tells me, I met someone recently and he said there's no way to make money in this country except have a full-time job. And I looked at him straight in the eye and I said, I couldn't disagree with you more. This is one place, I mean, I come from India, right? And this is one country where there are so many ways to make money. It's never about resources. It's always about resourcefulness and knowing what you want to do and being focused on what you want to do. So Sandeep Nanda is one of those people who's completely retired himself just with Airbnbs, and that's his focus. So we like to bring people like this and to come talk about their story and how they made that happen, how they made that leap happen from their jobs to full-time, doing something, whether it's short-term rentals or doing multifamily investing or passively investing. We'll also talk about investing in ATM machines. I know I'm kind of going backwards here in time because we're talking cryptocurrency and I'm going back to ATM, and you might wonder why. But ATM, guys, is a cash cow, and it's been around forever, and it's going to be around for a lot longer because there's a huge section of population in this country who either does not have a bank account or is underbanked, which means they don't really use their bank accounts very much. So that's why ATMs continue to thrive even through COVID. That was one of the best investments in my portfolio from a return standpoint through COVID. So I really encourage you to attend this with an open mind and see how that can help you. I also would like to say that I would love your topic suggestions on what will be useful for future webinars. I've done so many of them. I'm kind of like looking at it and going, oh, that one, but then I go back and I see that I've done it already. So if there's anything that you specifically wanted to learn about, now's your chance. Tell me what it is, and I'll figure out the best speaker to come talk about it. It should be related to investing, preferably not in stock or crypto market, because you guys have that covered usually. I'm going to focus on the non-crypto and the non-stock market and talk about taxations, asset protection, how to reduce your taxes, how to plan for your estate, and so much more. So anyway, if you're interested in joining my group, I have a Facebook investor group called Purely Passive. Feel free to connect with us, and that way you'll get notified of every webinar we have and every event we have. Just a little bit about me. A lot of you folks know me. For those who are new, I'm from Bangalore, India, moved here in the 90s, and was in tech for 20 years, graduated with a master's. I also financially freed myself in 2019, June, to do full-time real estate. I started Cherry Street Investments, and I already spoke about this. I want to introduce Elisa. For those of you who joined in late and probably missed the introduction, she is a powerhouse. I mean, this woman is amazing. And she owns over 1,000 units. I know that number is out of date because she's closing on a new apartment complex in Phoenix right now. So she's done a lot of deals in Texas, Arizona, and Washington, and executed several projects, both rehab and renovation project, as well as JV partnership with phenomenal returns. I'm actually in a deal with Elisa right now in Phoenix, which we're going to exit this year with some great returns for our investors. Also, she quit her full-time job, and she really wants to teach other people to do the same. She focuses her time and expertise to help all these 9-to-5ers to quit their jobs in 10 years or less. That's her focus. And she's very sharp with numbers, and she has a lot of CCIM training, and also founded the EZFIU, as I spoke about, and another Seattle group. So with that, I'm going to hand it off to Elisa. Elisa, take it away and share your screen. Thanks. Thank you for being here.
Thank you, guys. I'm gonna switch out. I've never used like a filter before, but let me try this. This is what I look like right now after all the introduction that Kavitha has done. It's like, ooh, that was very fanciful. Thank you, Kavitha, for the warm intro. And I'm gonna go turn it off now. That will be a quite a bit distraction over here. Okay, so I'll just have to try the filter. I'm going to share my screen over here, and then we're going to probably just get started with our feature presentation. Oftentimes, a lot of people have asked me about, hey, how do I reach financial independence, right? So like I did a lot of soul digging during the COVID time. So I quit my job in 2019, and then shortly after, in about 6 months or so, somehow my old department got all dismantled. So I was like, wow, I should have actually stayed on the job for a little longer so that I can get the unemployment. Jokes aside, after that, financial education is always something that I'm really passionate about. So time and time again, it comes back to this topic. Even lately, we kind of update our roadmaps and the visions in terms of the apartment space where we at. And everything kind of merged together in terms of helping people to reach financial independence, helping people to kind of upskill their knowledge on financial literacy. I'm even thinking about helping tenants to kind of get there in some ways. So really kind of elevate yourself to like a different levels. Like you're making a mark. History is more than that. But that being said, Kavitha has asked me to come back and redo kind of this presentation. So in 2020, when Corona first hit, it was my 5-year roadmap to kind of start an education program. And then I was like, well, we should just do it because we're saving all these time from not having to fly everywhere. So that's kind of where we first started. And it really got me thinking about, well, there has to be some sort of framework when you're putting it on, and how do you actually know what freedom actually means, right? So I came up with this deck, and this is about me. Basically, if you want to contact me, these are all different ways to kind of contact me. I'll put a calendar link in the chat box later on so that you can kind of book a time with me later. So I want to kind of share a little bit about my personal story. So where it all kind of started. Just to kind of show you guys like what basically coming from nothing, no background. A lot of people is like, it's kind of funny because I'm Asian, so they immediately assume that I come from like mom and dad that may have some money to kind of invest or whatnot. So not true. This is
Chinese money, Elisa.
Right. So this is kind of right. So like this is kind of the neighborhood. It's not exactly the alleyway I grew up with, but this is very familiar how I grew up with. And then really our family wasn't poorly off, just that in Asian countries where you kind of grow up. I grew up in Shanghai actually, and this is just the old structure how it was put in place. Everybody is kind of share with studio. So when I grew up with my aunt, and my aunt had a little girl as well, about same age as I do. So we actually literally grow up in places like this. It's not exactly my home. I try to look up online to look for something that's similar. But we shared I think it was 80 square foot place in the middle of Shanghai, and then we don't really have running water toilets either. But we weren't poor; we were the mid classes, right? So to me, when I grew up, and I didn't live with my dad. Notice I said I lived with my aunt because my dad is actually somewhere in Canada. First, he went to Germany, and then he went to Canada. He's one among the first that worked overseas or got a degree overseas. So to me, that was kind of a cush life. It was something I modeled around and something I desire, because he actually had a 3-bedroom house in Medicine Hat, Alberta, which probably not many people knows where it actually is. But nonetheless, it's a suburban area. But that's kind of where he lived, and that was always something put up, when we grew up in the little houses that we lived in. And then we're thinking about, oh, my dad has a job, and then he went through engineering school, so this must be the path to go. And then there I was entering the rat race. About 17 years old, I moved to Canada to be with my dad, because that's the last year you can move before immigration becomes really difficult. So I moved to Canada, met with my dad, and a couple years later, the direction I was given was like, hey, you can choose to go to engineering school, or you can take doctor degree. And then we discussed that the doctor path is kind of not for me, because it's going to be like a 10 years, more than 10 years of hard working before you even enter into the workforce. So computer engineering is what I chose, graduated from the Waterloo, Canada, and got directly launched my career inside of Microsoft. This is not also exactly, this is actually the exact building I used to work for, but this is kind of like the cubicle I worked for. So I got a program manager jobs or product manager jobs in Microsoft. And basically my job was to kind of coordinate around the production lines and kind of putting the vision of the product together and get that realized. So I work with a lot of software developers. I myself used to be software developer, but I found it pretty boring. It's not creative enough. So I was able to kind of get into a position where I can kind of define the requirements of how the product's being built. So it seems to be really exciting when I first started. And then after a while, after 5 years or so, after some people even like 2 or 3 years, you probably realize this. Life becomes, once you kind of get into the middle manager or the senior band or so, mid-career, you realize a lot of your time is actually spending on politics. And then to move it up, climbing up the corporation ladder, there's a lot more to that. It comes to a point where 80% of my time was spent making presentations to VPs. That doesn't even, to me, it's not really rewarding versus like defining requirements and creating new features for the customer. So it didn't really quite gel, So, and I was like, surely there must be something more to this. And then to compound that, in 2015, my daughter was born. That's the older baby over here, and I was basically straddled with, and also my husband is, we have decided he's going to stay home and take care of the baby because in terms of income, it just makes a lot of sense that way. So I have always been kind of the breadwinner in our family, because I grew up with a strong line of women in our family, so that was kind of like the norm, or it doesn't really matter. I don't think that there needs to be a stereotypical roles in that. So quitting my job isn't really an option. So starting in 2009, because the market crashed in 2008, and then we didn't know what we're doing. So we start investing in single family homes, right? And then on 2015, that was the only way I know how, other than my full-time job. When she was born, I didn't want to really go back to my work, but I had to after 6 months of maternity. So I did a lot of research on how do I quit my job, and then there I stumbled upon real estate investing, and I got on Bigger Pockets and learned about investing in multiplex. And then I realized I was doing everything wrong and switched all my portfolio of single families into multiplex, and then the rest is kind of history. So from there, there's a lot of growth for me as well. First fourplexes, then into small commercial multifamily deals, and then start looking outside the state. And there we stepped into syndication. So up to now, I think probably going to update this, but we basically are owner and principal over 1,500 units now. And over 15 projects. We had a four full cycle of multifamily deals. As being asset managers between 35 to 65% IRR. And then we passively ourselves invest in another 1,500 units. In fact, I'm looking for another passive investment to invest into. Because again, once you kind of get there, your money doesn't have to work as hard, but they can work for you. So there's a transition over there too. So here today, my life revolved around, like in 2015 when I had to go back to work, I was working I was in commute for 3 hours, and I only see my little girl for less than 3 hours. So that was a moment where you decided that my mental has shifted from, well, my life is revolving around my job to my job needs to serve what my life is. So shortly after that, I quit Microsoft and moved to Groupon, which is about 15 minutes, traveling to go to work. And then from there, I was kind of able to reach a little bit more life balance. So I specifically looked for jobs that kind of designed around the lifestyle I want to do, and also my growing investment portfolios. So today, this is how I spend my days. We, in fact, just wrapped up, came back from 5 months of traveling during COVID. It's actually fantastic to travel during COVID as long as you take precautions, because everywhere you go, there's no lines and etc. So we went to Cabo, so we went to Phoenix. It's kind of work mix. with lifestyle. And this is a typical like Monday or Tuesday that we were just on the water because the day is nice. So we took out a little boat out there and hang out with the kids. This picture is really important for me. Is basically this is kind of what I envisioned. Is Jake has a grandma, yes, 90-year-old grandma, and then she's still doing well. So we were able, but we knew our time with her is limited, so we want to spend more time with her. Because one of the biggest regret I had was I was not able to see my grandma off, right? She was living in China at the time, and then she passed very suddenly, so we weren't able to kind of make it. And part of it is because I had obligations with work and etc. So we kind of like delayed in terms of seeing her off, and then it becomes a big regret in my life not to see her. So it was really a privilege to be able to spend that flexibility of location where you work or where you are, or the flexibility of commanding of your time. And then we basically spent about a whole month down there in the last 3 months or so. We spent a whole month with her, and so she get a chance to really hang out with all the other kids kind of involved in here. So that was a really big thing for me. And so how do you kind of reach there in terms of freedom? So when I'm thinking about how do I actually put the frameworks around here, because everything, like if you're an engineer like me, you like to have some sort of structure to kind of like, how do you actually put it into perspective on that, right? So then I came up with this kind of like 10-step, how do you reach to your freedom? And a lot is internal changes. If you have achieved the internal changes, it sounds kind of cliche, but you have kind of you're halfway there. And so I want to kind of share the way that you kind of think about this and the habits and all that stuff that kind of you install in order to reach your freedom in about, anyone can do it, I believe, within 10 years. And some people may be able to do it 5 years, maybe even sooner. So the first thing first is you have to change your mindset. So we're going to go through what kind of mindset we have to change. There are a couple of steps over here tactically and hypothetically, because you need a North Star to kind of walk to. So for me, it was like writing that goal down, like throughout the years, like where I want to be, really visualize it every single day. And then you're going to go through an education period. And then don't worry, some people take a longer, some people take a shorter, but the time frame over there is some people are as fast as like 3 months, they're on board, they're like focused onto one thing, and some people may take a year, right? Because it really depends on your personality. You may want to explore more, but don't allow yourself to kind of stay in that state for more than over a year. Like do something within that year, because the action beats inaction. So that leads to the third step, which is just do it. Like you're gonna make mistakes. It's better to fail small versus sinking into Titanic. So just do it, and then you're gonna definitely experience some failures, but you can recover very fast from just doing the smaller things. And then applying your knowledge, because the best way to learn is applying your knowledge. And some of the workshops that we hosted with our students and masterminds is focus on doing. We don't have the best format that's out there, but by just focus on doing, get out there and doing day in and day out, you learn so much more compared to just learning from textbook. And then the fourth step is the results, right? So the positive results encourages that positive behavior in terms of the cycle. So the increase the cash to increase wealth is gonna, make you feel really great, and then going back to do the same again, and you're gonna reach to a certain point where you need to kind of protect on what you have. And then once you reach your goal, then it's kind of reset again, because now you have a bigger goal that you're kind of going after. So, all right, cool. So the step one is how do you actually mentally do this, right? So I'm going to ask a few questions on this, and then real quick, we don't have time to do these workshop style, but what I have my students sometimes do is like really quick, you're just going to put whatever comes to your mind first onto the paper for like 2 or 3 minutes. You're just furiously writing down what kind of comes to your mind. So digging really deep.
We're not doing a workshop here, but I encourage you to take a piece of paper and pen out so you can follow along and do it right now.
Great. All right. So always a challenge. And Kavitha is always like throwing additional challenges at us. But really kind of think about what makes you happy. What does your typical financial independent day look like? And then if the money doesn't matter, what are you going to do? Right. So these questions like really dig deep down and thinking about it. A lot of our workshop internalizing. One of the late stuff that we're working on is how to raise money. So also that is internalizing who you are. Like, so I think a lot is coming from yourself. So I used to be an artist as well, and probably still am. So that type of internal soul searching is giving me a lot of insight into where I want to be. So oftentimes when I go to marketing teams, SEOs and et cetera, they're like, wow, you're like the only client that comes in with a very clear vision, right? And it's because all these times spent thinking. So I think it's really important to have a think time, and it's really important to see like what makes you happy. What does your typical day look like? Because if you don't know what that picture look like, then you don't know where you're aiming, and then you're just kind of lost ship. So it's kind of like, oh, there's a number that I want to reach, but is it really the number? Right. So you have to kind of picture what your day look like. One example is when our student, when to her, she was, when she first joined the program, she was living in a giant house in Linwood. Here, I live in Seattle. And turns out her financial independence looks like the ability to travel, the ability to be anywhere where she wanted, the ability to spend time with family, friends, and etc. So COVID kind of really helped her with that. But she has this huge burden of this large house that she didn't even really like. So a lot of stuff changed for her in terms of she realized that as she's selling her house, realizing the equity and put that into investment is a lot better play versus, and then puts her a lot closer to her ideal life without even quitting her job, versus like kind of sitting in the house and that she didn't really enjoy. So that's why it's very important to kind of come up with that. And the second part of it is creating a millionaire habits mindset to succeed. And I'm not the inventor of it. I just read a lot of books, and then they all kind of gravitate towards the same methods. Doesn't matter what you do. I watch a lot of YouTube too. So that's kind of like I would share. So summarizing from all these books I read, there's a certain methods to really condition your mind to be the best way to success. And I would say I'm not. Now I kind of slacking off a little bit because it kind of reached a financial independence. Sometimes you slack off a little bit, right? But now in the last 2 weeks or so, I came up with an entire new goal with our business and etc. that requires a lot more focus and etc. So I have to kind of get back into this habit. It definitely works. It's really weird. If you condition your mind, then you become sharper, you become more focused, and you're going to get there faster. So visualization is basically, there's a few books I will recommend. Think and Grow Rich is something that I would recommend to read. And then the Miracle Morning is really great, kind of lays out this whole formula. So visualization is part of that step number one. You paint the picture what it is, and then you're stimulating your mind every day with pictures of your basically kind of the vision board, what we call. So then you can kind of see it. And then you can touch it, feel it, like whatever that you can engage with your senses, right? All you need is like an hour to 30 minutes to an hour every day in the morning. Just kind of condition it. And affirmation sounds really silly. Is speak out loud your goal, your immediate goal. So when I was working on financial freedom, I was like, I'm going to make X amount of money and then quit myself from my daytime job and reach financial independence, right? So that's basically the affirmation every day, but you have to speak out loud, and so you can hear it. It becomes internalizing. What that really does is start letting me identify opportunities. So even though in the past I've kind of just passed them by, but when someone said something or I read something, it just kind of like lights up in my head. And it helps me in terms of thinking, helps me like put that in the pieces, and then helps me to get there faster. The meditation is great. Some people swear by it. Some people are okay with it. I think when you do meditation in the morning, it doesn't have to be very long. 5 minutes, 10 minutes is all good. It clears your mind. And then I think it's a mind exercise that helps you focus more. So I would say like definitely kind of look into that. And then the journaling is also very important because you're engaged in scribing. So I think I've tried both methods on the computer versus writing. I think writing certainly does more for me by writing down, journaling what happened last couple of days, yesterday. What did I accomplish? What did well? What did not do well? It's like an affirmation, confirmation that I was doing a good job, because you need a positive reinforcement. Psychologically, everybody needs positive reinforcement. The Asian way of educating your kids is not correct, I don't think. That they kind of tend to be tough love, but nobody love like to be always in a negative light. So you gotta give yourself a little break, celebrate the success, even though they're very small. So you want to write down like at least 3 things that makes you grateful for, or like happy that happened yesterday, something like that. And then you can also write down the improvements, but critical thinking, not criticizing, is to write down like the tips to improve. And then reading. I do a lot of reading. I just kind of recommend some books over here. And the last piece is prioritization. I don't have that book recommendation over here because since last year I read this book. It was great. It's called Eat That Frog. I don't have it in this deck, but it's a great book. It's about an hour. If you like Audible, listen to it an hour and a half or so. It really helps you kind of prioritize and have a tactical way to kind of tackle the most important thing, one thing, right? So Gary Keller kind of talked about this, a conceptual one thing you should be focusing on, but Eat That Frog will be a very good complementary read to the one thing to allow you to kind of look at this. Cool. So once you kind of condition your mind, then it's setting your goal and chunking it down. So I come from a product manager perspective, and then also some project managing. So for me, the world always worked kind of like in math. In some ways, in math, everything can be break down into small enough steps in order to achieve them. And then that becomes, I realize that's actually a special ability. Not everybody can kind of envision that. But through the same mindset and framework, everybody can actually do that. So I would challenge you to kind of think about setting your goals and figure out your FI number. So the first step is kind of figure out your FI number. So taking what you have envisioned, that typical day, what that look like, and break it down into the FI number, which is how much do you need to make a year to kind of accommodate that type of lifestyle, right? So everybody can kind of do research budgets and all that stuff and put that all together. And then so that's your FI number. And there's a lean number and there's a fat number. Fat number is kind of like if money wasn't a matter, this is the number what I shoot for. For some people who are more risk averse, they may go dial all the way there. So before they reach there, they wouldn't quit it. And then for some people who's like, no, I'm a quick starter, so the lean number will be what you strive for before you kind of reach that financial independence. Also, it's a balance between how much do you want to quit your W-2 job and reaching financial freedom. Some people love what they do, so there's no need to quit any sooner, but rather just slowly building up. And then so you may want to retire later when you reach that fat number. And some people may be like hating their job a lot, and they love being entrepreneurs. So then you may want to strike for that lean number. So it really kind of depends. And for me, that's actually realization I had when I had a W-2 job is like, I feel like I was hitting a ceiling. Once I kind of reached a senior band, I was hitting a ceiling. I got a lot of heartache over this. I'm like, every year we have performance discussion, and then I just feel like, and then the constant feedback was like, well, you can't manage your communication very effectively, which really means playing politics very effectively. And I was like, why would I need to do that? And then now looking back, I realized I was meant to be an entrepreneur. I was meant to be my own boss because that's when I create the most, and the sky is the limit. So by kind of basically limiting myself in a corporation world where the next step is only like 20K or 40K more and you get this bonus, it didn't really excite me. So I think there's some internal that contribute to that, and there's some external as well, that certain people are built for a job, to climb the corporation ladder, and some people are built to be like an entrepreneur. Not one way is better than the other. We kind of talk about that oftentimes on our podcast, 10,000 Roads to Financial Independence, about that too. So figure out your FI numbers, and then you need to set out the SMART goal, which I think it's a measurable goal. And I'll have a slide later on, I think, about what SMART goal stands for. But essentially, you want to put a timeline and then make it very concrete and measurable, accountable, right? So that's kind of the goal method that I don't think we really need to reinvent the wheel. If you're in the IT world, your corporation job maybe asking you to do the SMART goal. So apply that to your life. So plan not only for your career, but apply that for your whole life, taking that like a large picture over there. So once you wrote out the goal, and you have to write it down, you can use an Excel sheet to kind of keep it as well. Then you can kind of chunk it down to a weekly task. There may be an in-between step where you're writing down a 90-day goal. For some people, that's really helpful, from a 3-year plan to a 1-year plan to a quarterly plan, and then chunking it to a weekly goal and then a daily task. And then that allows you to make a little incremental steps every single day towards your goal, because the Rome is not built in one day, right? And the last thing is very important, finding an accountability buddy. Like Kavitha and I actually have been in like a self-started like mastermind group with 4 of us who always meet. So, we always have updates and etc. So by comparison, sometimes, and also there's a lot of communication, but by comparison, you're like, okay, why am I not there? Right. So that kind of serve as accountability buddy. You kind of really hitting these numbers. Great. So here's an example of SMART goal: specific, measurable, achievable, relevant, and time bound. Okay, great. So next slide, I would like to kind of recommend a book over here as well. It's called by Gino Wickman. It's called Attraction, and they have these really specific, tactical way, very boring book to listen to. So I recommend getting a paper copy, and they have worksheets online that's free as well, called was an EOS system that they recommended. So you can kind of map out your vision and then kind of like then dive it into step by step how that kind of works. So step 4 is you're taking some action, but you're not really taking action. There is a period to do so. If you didn't skip to this period, then you may be making more mistakes. So I would highly recommend get education, which is why you're here today, because you probably realized that there's a why, and then you want to educate yourself. I think it's very important to find a mentor. Because I think with a mentor, you go far a lot faster. I'm always a do-it-myself person to start with. Not until I kind of joined a more expensive mentorship group, then I realized I'm like, wow, this is what I'm missing out, right? So by comparison, between 2009 to 2017, I want to say I owned, don't quote me on this, maybe 22 to 30 units or so by myself door. And then from 2018 to now, like that's where we accelerate really a lot. The differences is in 2018, I have decided to sign myself up with some mentorships. That's kind of started with 2017, sampling different education programs, sign up for that. So you're investing in yourself, finding that mentor, finding the right network or group, and that's going to help you accelerate. So is it really worth it that you're paying all these tuition? Yes, it is, because you can kind of really launch springboard into success over there. But definitely do research and make sure the mentors are doing what you wanted to do, right? Because otherwise they shouldn't be like able to teach you. If they're not doing what you're doing, then there's not really a success example with that. And also doing a lot of reference with students as well. So it's important to find a community with like-minded people. There's a lot of programs out there. If you don't kind of gel with your mentor in terms of how you think about the stuff, then yes, they're going to take you to a certain degree, and afterwards it didn't kind of feel like you belong in some ways. So you want to make sure that you find community of like-minded people you can even turn into partners with, and all the other stuff. And then read and listen a lot. Obviously, I read a lot of books and listen to a lot of books. Audible is great invention, I think. And so I used to make these long commutes. During commutes, I can listen to them, or just kind of before I go to bed. And now I listen to them. In the shower, you can listen to them. So there's incremental chunks of doing stuff. Often people will saying, oh, I don't have time to read, right? But do you have time to read 1 page? Do you have time to read 5 pages? Like all these little pieces kind of really counts. If you prioritize that, then you're going to make time for it. And finding an accountability buddy. And again, by joining a community, you're going to have better chance finding the right accountability buddy. Sometimes it's your spouse, which is great if you happen to have a spouse that you self-encourage each other with. For me, that wasn't the case. So finding an accountability buddy, kind of like Kavitha and everyone else, it really kind of helps me. And learning by doing, and that's a philosophy that we always hold dear and true in EZFIU. We always believe in there's chaos, even like, during the programs and etc. But, at the end of the day, it's the results that matter. Did you do this, right? Did you do this? Did you follow through with the challenges? We're going through kind of marketing courses right now, how to raise money. So it's like, hey, did you do this? Did you write your blog? Did you do this? Share with the students and all that sort of stuff. So emphasis on doing, because oftentimes people get into, how do you say it? Procrastination, by analysis paralysis. I often look back the meetups I joined, the free meetups I joined locally over here, looking back at all these folks who I met 3-4 years ago, they're still kind of doing the same thing because they were sitting on the sideline, not doing anything. I actually recently interviewed a guest, one of my favorite, Nikolai Ray, super smart guy. And then he talked about, he's like, hey, your job is investing if you're an investor. If you're not an investor, you're not an investor. I'm like, that's a really good wisdom, so kind of just do it. Okay, so tactically, in terms of money movement, how do you actually get there? There's actually a particular formulas that you can do. So the first step is, if you don't have equity already, then saving is your first step, because you can find anyone. I feel like if you're making more than 100K, you're going to be able to find around 25, 50K a year, right? But this really comes with sacrifice. So I met people who are single by themselves, and then they're like making 150K, and they're like, oh, it's really hard to find 50K a year. I'm like, interesting, because I also meet other investors who makes only barely 100K combined, and then they were able to save, close to 50K a year. So really, it's a mentality thing. It's like, hey, you're gonna sacrifice the comfortability today to trade for exponential growth in the future. What is your freedom really worth to you, right? So there's a rule, apparently, by 25x rule, the 4% rule, is saying that once you accumulate enough wealth by just investing in a stock and everywhere else that is generate 4% increase, you can actually get there. So by that rule, and I have an article about this, kind of read about it, by William Bergen. He basically wrote about determining withdrawal rates with historical data. But essentially what it means is that if you think you gotta live 25, certain years afterwards, by saving enough so that you can kind of distribute the 4% every year, you're good to go. So there's some demonstration of this example later. So the more you save, there's also a compound effect, that there's a double effect of, if the more you save, because you're training yourself into that, saving mentality, so you're not going to be spending a lot. So therefore, when you retire, truly retire, and you could live on a much smaller budget. So you don't have to save as much. And also when you retire, you don't spend as much. So money lasts kind of longer. So there's a double effect to that. So the less you need to lead kind of leads to less taxes. So after you retire, it's about the rate, how much you're withdrawing, right? So if you withdraw less, your income is going to be less. Therefore, you're also paying less taxes. So there's almost a triple whammy in terms of the saving, the benefit of saving. A lot of people are not savers, so that's not a big deal. But here's just an example of what savings you could get on. So really kind of challenge yourself to see how little can you spend. If we all think back into our college year or high school year, we barely spend any money, and then eventually that kind of money your expenses balloon is because the desire, the wants, and all that stuff. During our 5 months on the road, it was so how do you say it? It was so refreshing, because I was literally living out of one suitcase with 2 of my children's. It's kind of funny. My husband actually packed 3 bags, but all his stuff. And then we actually packed it into one carry-on. I even wrote an article about it. It was kind of liberating, living out of one suitcase, one carry-on, with me and my 2 children, because I don't have a lot of stuff to deal with. So it cuts out a lot of excess, and living that minimalism life was actually kind of allows me to create more. So example of that, breaking down into the math, it's 100K a year, spending 50% on expenses. Your effective tax rate would be a little bit lower, 15%. that will save you about 25K. So this is why I want to kind of demonstrate, if you're making 100K a year, you could save 25K a year, right? So, and if you make 150, then you should be able to save about 60K a year. Has some formula based on that. So 50K a year is attainable if you have a household income more than 150K. If you invest in things that yields about 8%, you will probably be FI in about 18 years. And if you invest in things that yields at 12% without tax, a lot of investment, I think Kavitha brings and some of the stuff that we brings, you could FI after 10 years. And so now the question is, how do I find these returns of 12%, right? So that becomes a big thing. So, but unless if you saved enough money to kind of invest, that snowball doesn't really start. And then the second part is, some people are like, well, saving is just not my thing, right? So there are people who are creators, and I kind of belong to the second bucket over here, more of a creator. Kind of one thing to touch on the step 5, the saving too, is if you look at Warren Buffett. I've watched his documentary lately, and he still goes to McDonald's to get breakfast every day, right? So to him, investing is a interest. It has nothing to do with buying a jet or all the other stuff. So something to keep in mind. And then picking up a side gig. So picking up a side gig is, because if you think about, I'm kind of funny when I'm thinking about any business is about increasing income and reducing expenses, right? So you can kind of see it. So by reducing expenses, but you only have so much to go. So really kind of the second step then is spending all the time that you would otherwise be consuming and shopping and redirected that into a side gig potentially. So it's either be a side gig or a investment vehicle. It depends on where you're at in terms of your wealth levels and etc. So if you have some capital, then you can use your money to start making money, which is investing. But if you don't, if you're like at the $10,000 or less saving level, then you need to find some side gigs that require some active involvement, like flipping houses, wholesaling, running Airbnbs and this and that. Airbnb is an active business, not really not really a passive investment, unless if you have all your process built out, right? So basically, at the 10,000 level, what you have saved, you want to pick up some side gigs. So the goal is to combine with your saving and making side gig, you're reaching to the 50K a year type of thing. So ideally, when you pick up a side gig, you want to kind of focus on real estate related. And there's a reason why. Because only real estate related active investors, like real estate professional, is going to give you a lot more tax break eventually. You're not going to get that when you have a W-2 job, what we call day job. But don't worry, that activity is going to like train your muscle to a way where your real estate side of things start kicking in and making more and more. And eventually you quit your full-time job or scaling back to part-time, you can now qualify real estate professional. So that sets you beautifully for tax advantages. Or something you love. If you really don't like real estate, force yourself into it, right? There's many different activities to involve in real estate. There's a million different ways to kind of invest in real estate, be active real estate investor. But if you don't like any of that, no big deal. Just do something that you love. Now, I have one student in my program that she does different than everybody else. She's trading websites. She's learning a lot of stuff there, trading websites and, all that sort of stuff. So, if you read Rich Dad Poor Dad, the real estate as investors and business owners are on that right-hand cycle, which is where you want to be instead of, small business owner, self-employment and the job, right? So you can also, if you're not interested in real estate, is getting active into some business that you really have a talent for. And we have interviewed like 40, almost 50 people on our podcast. There's all million different ways to create a business. So you can create that. And then the business really is a accelerator. And real estate is getting rich for sure game, because you're kind of building it very slowly and there's capital involved. Whereas building a business could have a very accelerated path. Right, but you're gonna spend a lot of time on that, and you're gonna learn a lot from failure. There's not a one formula to have success business. So that's kind of where you want to do. You definitely need to learn marketing, whatever that you're doing. you definitely need to learn marketing. And that's a lesson for me too. During the years I quit my jobs, I realized the importance of marketing. And I'm still butting my head over some of that. That's where I ask Kavitha and etc. on like how to kind of improve that. And then learn how to read books means like not like books, but like how to read financial statements. Because once you realize how to read financial statements, income, outgoing, then you start spotting opportunities. And all business are the same once you see enough of that, and you start having great modeling in your head, and that become like the business sense allows you to be profitable business versus just doing work. So from generating, so here are some ideas on generating 25K a year. So some math. You work at 13 hours, $13 an hour, so you need 40 hours a week to work on it. If you increase it to 26 hours, working at 20 hours a week, then you can do it. And then here's some other ideas with if you become a real estate broker, then by breaking one deal, a commission can be at 3%, sold at 833K, that gives you 25K from it. Or if you're presenting both parties, you sold at 6%, then you make more. You only need to sell less of a price. So I think a median housing single family home in Austin is probably worth $416. All you need to do is find buyer and seller and sell one property, and you're there. Right? So that's just to kind of put it into perspective. That's not super difficult to do. You can do it. And then the seventh step is kind of finding couch monies. So for a lot of us who are mid-career, you're gonna find some couch money, what I call it. Oftentimes my partner's like, hey, we needed this like extra earnest money. I'm like, oh yeah, let me go look at my couch for a little bit more and then see how much I can come up with. And then I always find it. So you didn't know that you already have money in your bank account. For a lot of mid-career people, you already have that. It's just not sitting in a very efficient vehicle, or you didn't know you can access it to invest. So this comes into, and that's part of what we offer is like teaching people like, hey, there's all these alternative way to kind of generate some more from stuff that you already have. So freeing up your lazy retirement fund, and I think Kavitha kind of probably talked about it. I think pretty much every syndicator talked about it, because there is trillions of dollars in retirement fund that with your past employees, the 401k account, you can actually free these up to invest in alternative investment. And a lot of people don't know that existed, right? So by just simply setting up a certain policies and this and that, you now can free up your money from the Wall Street into more alternative investment. That may have more opportunity, or that may allow you to diversify more out of the Wall Street. And rent instead of own, that one's kind of opposite. Wrote a whole article about why people should rent versus own. It makes not a lot of sense. It's actually pretty controversial. A lot of people like send me emails about it. But basically, if you did a formula, if you live in Austin or live in Seattle, West Coast, where the home price is really high, and you don't get a lot of cash flow by buying rentals, then you want to rent in a good place because it's cheaper to rent than buy, right? And then instead you free up that cash to invest to somewhere that is more cash flow generating, or gives you more returns. So you have to kind of look at as a full picture to say, okay, what part of my portfolio, including your own living, that I can kind of move into a more efficient way by renting, and then own using that capital to own somewhere else that generates more return. And making my sideline cash work harder while not deployed. So like this is cash that's kind of just sitting there, right? So like oftentimes, a lot of times when people have multiple accounts, they have like these change cash that's just sitting nowhere. You can potentially put that into a whole life insurance, for example. And I think Kavitha runs, she does the whole life insurance structuring, and it allows you to kind of make your sideline cash to earn extra 4, 5, 6% tax free. That's the key. So that allows you to kind of make it work a little harder, and then you can borrow against it to use for cash money, etc. She'll explain this a lot better than I do. And then freeing up your primary home by house hacking. This is kind of like for most mid-career people, that's probably not an option. But if you were thinking about buying a new house for your personal goal, you may want to look for like split level houses. This, like, someone drew this in a conference I went to before, and it was like the comfortability trading for profitability. So the less comfortable it is, the likely it's more going to be profitable. You know, I met one guy who does house hacking for days, and all he did is had 3 houses and house hacked them, rent them room by room, and he was financially independent in a year. Right. So it can be as fast as that, but you're sacrificing a lot of comfortability because he was living literally in the basement, in the corner of the living quarter in the basement, and he's renting out all the other 7 rooms in his house. But it doesn't have to be that extreme. So even if you have family, friends, kids, you know, that's all kind of excuse that you create for yourself. You could live in one level of the split level and never see your tenant ever again, and they can live in the basement. Now, if you're going to crank up the uncomfortability a little bit more, profit probably goes up more, then you can maybe move to the basement and rent the upstairs unit to your tenants and etc. So that can definitely be maneuverable. Or you could buy a 4-plex moving in with primary mortgage and essentially rent the other 3 out and essentially pays your home cost and living for free, which is a fantastic thing. All right, and then cash out refinance is, you know, that's a lot of people are sitting on, for example, investment property, single family home. Prices of the housing is all-time high. So you could take out a HELOC on this, right? And then you don't have to use the HELOC. If you don't use it, you don't need to pay any money to it, but yet you freed up that equity inside that house so that you can use it should an investment come through. And then you invest in that. But be very careful when you do that. You want to make sure the investment that you put in definitely has a pretty good, you know, like a pretty risk averse, and then you can make for sure, not for sure, but like pretty sure you can make a higher return than what you pay for mortgage. But right now the rates are all-time low. This is maybe one method to kind of free up some more money.
Hey,
Cool.
Elisa.
Yes.
I just want to add a few things here from my own experience that might be add some little more color here. So I own 11 houses and I rent right now. A simple reason is people look at me and laugh. They're like, what the hell is wrong with you, right? But I moved into a neighborhood where my daughter was supposed to go to a school. She wanted to go to a school which is a very good high school in Austin. But when I looked at the numbers to buy, it didn't make any sense to me, right? So I looked at the rents, they were really low. So I ended up renting my house for a lot more than I'm paying rent here, which is a better location from a school perspective. So sometimes you really need to, like you said, it's uncomfortable, right? I'm renting, it doesn't make any sense. I'm not living in my own home, but it made sense for me when I did the numbers, right? Like it's sometimes about numbers. And for me, quitting my job was more important. And I looked at it as, hey, extra cash flow from my rental, right? Like my home, which is now rented. So sometimes you have to sacrifice and make those sacrifices if you want to cut costs, right? And I was getting ready to quit my job and I was on a lean FI at that time. So I made that sacrifice. The second thing I want to say is a lot of people have emergency reserves, right? That's usually sitting in their bank accounts earning next to nothing. Right now it's 0.5%. It's pathetic. So figure out how to make that money work better. Like there are things like infinite banking policies, for example, which make 5 to 6%, while you always have access to that cash for your emergency reserves, for your investments, and so on and so forth. So there's a lot of ways you can use that lazy money and deploy it much better, and especially in insurance policies because it's tax-free, right? They grow tax-free. And you don't really understand the effect of taxes until you start compounding money and looking at the compound interest that you earn after taxes and before taxes. Huge difference long-term, right? The other one I wanted to also point out with the free up primary home. I have this all the time with investors. They say, hey, I paid off my primary home. I said, do you need a medal? No, I don't. I actually tell leverage is an all-time low. Mortgages are an all-time low. If you're paying off your home, what you're basically doing is earning 3% or less on your home, on that money. So let's assume you have a $400,000 house and you paid it off. Kudos to you, great. But now you're really earning 3% on your $400,000 house because that's what your mortgage would have been. So think about that a little bit and see how much sense, if you can take that 300,000 or even 80% of the $300,000 and invest it somewhere for 12%, would your money be working a lot harder, right? That's something I want you guys to think about, because I know, I mean, coming from India, a lot of folks just want to pay off their home. And sometimes that's not a good strategy. Actually, most times, especially in the market that we are, with the interest rates being historically low that you can lock in for 30 years, that is not a good strategy. That is not the optimal use of your dollars. So I'll hand it back to Elisa. I just wanted to give you my 2 cents.
Yeah. Thank you, Kavitha, for putting that in perspective. Yeah, so very, very true. So you're sitting on all these pile of caches that you didn't even know existed, right? So here's another book. I'm going to just say The Power of Zero is one of my favorite. This conceptual. Basically talks about Roth vehicle and the whole life insurance are really the two. If you believe your tax rate is going to be higher once you retire versus now, then you want to kind of converting all your stuff into Roth and then also invest in whole life insurance so you never have to worry about tax in the future. So, great book to kind of talk about it. Again, it's conceptual. Here's the infinite banking books that we kind of talk about. Like, I think Kavitha runs a she advised people on infinite banking, but this is a great concept to kind of read about it. It takes a while for you to wrap your head around the infinite banking. And then this is actually one of my favorite. I actually sent this to my investors for holiday gifts. Everybody gets a copy by Ken McElroy, one of my favorite syndicator. ABCs are buying rental properties. So it gets you kind of started in terms of how do I think about rentals, etc. Ken has a really great ability to break down all the complex concepts into a very simple one so that you feel like, duh, and how come I didn't think about it? It's because he's really smart to break it down into that. He also wrote the ABC of real estate investing, which is one of the second best seller for Rich Dad Poor Dad series. And then the Rich Dad, Robert Kiyosaki, when he makes money from book selling, he gives to Ken to kind of invest. That's kind of how it works. Great. So, and also, so the second part, so the A step is investing. So you want to kind of move to, you're making all these extra money, you're kind of moving slowly into the business quadrum versus, in just a W-2, you like kind of efficientalize all what you have, then you want to, then you because you freed up all that cash, you made all that cash, you saved all that cash, then it's important to invest smartly into real estate, not a job, right? So you want to snowball that investment. And then like any investment, like Warren Buffett's talk about is like invest, right? So basically consistently investing it. And then religiously investing in it, doesn't matter what you invest in it, but religiously invest in it, that's going to level out your risk, in terms of that. Best way to kind of invest on like mutual fund stock market. I went to a Fidelity advisor to kind of talk about it. They talk about investing at different increment, like invest the same amount like throughout the year, and the same philosophy over here. When you have money, invest. So it's just making that vehicle bigger. Some investments are going to be better, some investments not as great, but it all kind of evens it out at the end. So invest for equity gain while receiving cash flow is a big thing, especially during this market cycle. I think if any lesson I learned from real estate investing is invest in the right cycle of the market. Every sub-market has a different cycle. So be able to kind of pick that, or be able to trust someone who has the instinct to kind of pick that is very important. So you want to invest in not just for equity gain, because that's a lot of speculation. You want to also see kind of day one cash flow asset, because if this is why I love multifamily, because if your property is not getting equity, no big deal. Just kind of write out the lows and come with cash flow, right? And then reinvest in your earnings. So if there's an option to say, yeah, I want to reinvest, and then try to reinvest that earning as quickly as possible. I even talked about maybe compounding, because on these passive investment, I've thought about this. I use my solo 401k to invest in them. And I invest a 50K or above on each deal, and then they come in a cash flow format. And then because they're 401k, I don't really have anything to do with them. So by compounding that with index investing is actually a pretty good strategy, because I'm like, following the investment method of investing religiously throughout the whole period, when I'm receiving cash flow on a quarterly basis, I put it into index fund until that accumulate another 50K, then I can take it back and then invest it into passive investments, because that's my preferred way of investing. And invest in value add projects with experienced sponsor partnerships. It can be a yield play as well and value add, because value add project forces value. So it allows you to basically, at any market, to be able to make a little bit more. Versus if you do a yield play, you're kind of subject to the market, right? But the value add may be coming in the form, not necessarily physical value add, maybe it's a management play. So there's all different kind of value add projects you can put, but the key is be able to create that value by investing in value add projects. Using cheap fixed rate debt for leverage. So this is great. Like what Kavitha is saying before, the interest rate is all-time low. If you locked in a fixed rate debt for 30 years for 3%, I believe, just mark my word, I believe in 3 years the inflation is going to be hitting 4 or 5%. So by borrowing 3%, lock that in, you're almost making money by borrowing that low interest rate. So very interesting concept. And paying down properties, right? So why do I pay down property? This is kind of interesting because Kavitha just said don't pay down your property, like leverage, right? But you don't want to over leverage on the property. But by paying down your property using the rental money, which is cash flow, you're gaining basically position in the property, so that you are actually creating value again, like you're accumulating values on that. And then once you pay down the property, then get an interest only line of credit on the property. So this is kind of where that paying down property and getting a line of interest that's interest only. A lot of mortgage brokers, I have investor mortgage brokers. At first, when I talked to them, they always talked about, no, you got to pay down like the principals and all that. Great investment strategy for people ready to retire. Definitely pay down your mortgage. But if you're in the growth mode, like the interest only is a great way to kind of think about it. Let's just say you borrowed 100K, even at a 12% interest only, that means you're paying basically $1,000 every month for 100K, access to 100K. Right? So versus if you have to amortize it, pay down the mortgages on that, that's a lot more principal wise. So again, everything comes down to a cash flow when you try to retire. Consistently evaluate your portfolio in terms of return on equity. Want to kind of do the return on equity calculation, which is basically how much, if you have a rental, how much you're getting back from rental income divided by how much equity there is in your property if you would just sold it the second day, right? So I bet you a lot of West Coast investors, even Austin investors, you probably be at the 2% return. So that's when you're kind of thinking about, should I free up some equity by refi or getting out HELOC or, cross collateralize and leveraging and all that sort of stuff to make sure that your equity is actually working harder. And then rinse and repeat. Cool. So here's a formula on this. This is the importance of investing. So if you did a 10% return, just for easy math, and then you can find plenty of projects that's out there that returns perhaps more to that. So to retire with 50K, you would need a 1.25 million. So that's the 25 times formula that we had. And this is how you're going to get there. If you say 50K compound interest second year, 105, you do the math over here. So by the 10th, 11th year, you can retire. That's kind of, by the 12th year, you can retire. So that's where that calculation kind of comes in. If you had a 12% return, then you can probably retire in about 10 years or less. So that's kind of where, the formula why I really believe like everybody can kind of retire in like a 10 years. All right, so the last thing, the ninth step is like boost your return, use tax benefit. I mean, it's a controversial concept that people are like, oh, I always pay tax because ethically I should be paying tax. But if you don't have to pay that 30% tax, some people are in the more than 50% bracket. Like you have to give away half your paycheck in that. Imagine if you put that, actually did an investment and then donate to the causes that really feel passionate about, you could do a lot more with it, right? So leveraging tax plan to boost your returns and invest in buy and hold projects to receive tax-free rental income. So I have an article about how I pay zero taxes step by step. Again, it sounds really easy, but it takes a couple years to implement it. So by investing in a rental project, oftentimes the paper loss, the depreciation is going to offset some of the rent income, which will help you achieve more tax efficiencies. You can use 1031 exchanges to boost your tax return, become a real estate professional by starting to become active. So again, I kind of talked about that in the articles I have. And then use accelerate depreciation to offset your active income. So this is kind of getting into a little bit more advanced topics about taxes. I'm sure Kavitha has some other education program. If you don't, like my YouTube also has some videos on cost segregation, accelerated depreciation, which is something most multifamily storage unit investment will kind of pass down to you. And by become a active real estate investor, you can kind of take full advantage of these. Invest passively, actively to gain paper losses. So this is the depreciation part. That's why real estate investing is so awesome, because it's the only few vehicles that you can offset a lot of stuff. The other thing is also opening your own business. You can write off a lot of expenses, increase your passive incomes and reduce your active ones. So slowly, as you kind of doing that more, you can kind of dial back on your active incomes and start increasing your portfolio. So you make money and put that money into passive investing, and slowly you can kind of do less of that active job and then pass it into passive, and then your money is kind of working harder for you and eventually ready to retire. But once you kind of get there in terms of made a lot of asset and wealth, they want to make sure that you plan well. So I'm going to ask a question like, who are these two people have in common, or three people have in common? Maybe it's not what you think it is. It is the fact that they did not have any asset protection plan. For Chad, he didn't even have a will. So in the Prince and Michael Jackson's cases, they had a lot of estate dispute. So their heirs can actually not get to the wealth. So one day that they passed, there's so much more that going on, and a lot of money is wasted by going to abatements and all the other stuff because they did not have a living will. So that's what they have in common, which is not having a plan to protect their asset. So once you made all these money, anything can happen. You want to make sure that you're putting in the legal entities and all the other stuff to asset protect it. But if you're in the beginning of that step, then don't worry about it too much, right? Like at some point, it's not cost beneficial for you to be like doing super elaborate asset protection. But once you kind of reach to about $1 million, or maybe even a little bit less than that, if you own a lot of rental actively, then it's smart to start protecting your assets so people are not taking away from you. So we're almost there. So when you prepare for retirement, there's also a transition that happens. Is to get your financial. So before you retire, really plan for that retirement. Me and my CP actually planned for my retirement. We didn't plan for having my second child, but when I had a second child, we actually had many discussions on how our next step is going to go. Right. So when we reached that balance, and we talked about maternity leave, using maternity leave to kind of drag on the clocks. And then at some point, I need to quit my job to qualify for active real estate investor professionals, and all that sort of stuff. So it's a very elaborate planning. So you want to make sure you did all your refinance on residential property, because once you quit your job in a year or two, before your other income kind of start replacing it, forget it about residential, mortgages. So you want to make sure that you're prepared for that before you quit. So going back to step one to find your new why, because there's going to be a period, I think me and Kavitha both went through that. It's going to be a 6 month or 8 months adjustment, 18-month adjustment to find out your next goal. Because people, as we're never satisfied with challenging ourselves. So you're going to mourn the losses, even though it's a good loss, to your job, and then start finding out your new why. And our new why right now is kind of like how to combat, the world of domestic violence, how to using housing to kind of providing social conscious investment. That's like really a new why, like for us in the past month, that kind of really divided to prioritize your time and freedom, because you worked so hard to reach your freedom. Now it's a time for you to kind of implement that, and then you don't have to work so hard anymore. You're good. Oftentimes we get into that mode in the first 6 months, we're like, oh, I'm going to replace more our active income and this and that. So you kind of overwork yourself. So really take a minute, look at your vision board. You already achieved there. So like now it's a good time to kind of enjoy and ease into that phase. Easing off work and plan for exit. right? So before you quit, you could play into, oh, I could be a consultant if not too sure. I'm going to do a independent consultant, and it's slowly replacing my job with an investment. So it doesn't have to be like right now, just quit it right out. It can be a transition. Understanding your health insurance coverage. So do all that research before you qualify. The good thing about all these paper laws is it may qualify you as Medicaid, which is crazy. And roll over your retirement funds, make sure all that is taken care of. You can kind of roll that over into solo 401k, free up for more investment, but making sure all that is taken care of before you leave your job. Saving all your work records and referrals, because just in case if you have to go back into your workforce, you have all these reference and all that stuff. So if you need to pull out some numbers, you can do that. And also, I think Kavitha probably agree with me, like some of my old colleagues become my investors, right? So having these contacts was really kind of beneficial. Decide where to live, because once you free yourself, you have the freedom of time and space. You can live anywhere you want, so you don't have to really fit into a box. The city that you live in may not be the city you desire to live, so start planning out where you want to live. And this is actually a trick as well. If you live at 80% of the rest of the world, your cost of living may be much lower than when you live in America, somewhere you don't even want to be, right? So if you desire to be in Thailand, you desire to be in Portugal even, that's going to be a much lower cost of living. So plan for that. And then figure out your FI schedule. So it's like mapping out your day, your week, how that's going to go, because the danger of overachievers like us is once you quit your job, you're going to work yourself to death, which is crazy. So you want to definitely kind of figure out your schedule for that to get ready. And then you're retired. After you retire, you're going to go through a couple iterations, and you're going to start wondering about what your space is going to be in the world, or what impact you're going to make in the world for some of us. So you're going to have reevaluations, and there's going to be new goals that comes in, which is why I interviewed more than 50 people and about their FI journey, and none of them were just kind of doing whatever, the traditional retire phase, because they found it's not challenging, and then they enter into another business, become entrepreneurs. But the key is do what you love to do. So don't get caught in another rat race, right? Cool. So real quick, this is my contact information, and this is the end of our presentation now. So just kind of wrapping this up. I'm going to put, Kavitha, if it's okay, in the chat box, I'm going to put, my contact information over there. Yes, I'm going to stop sharing. And the way that you can kind of schedule time with me over there as well. Kavitha, go ahead if you need to kind of do a few closing words.
Yes, of course. I mean, like, wow. Okay, if you found this useful, raise your hand for me. Hit the raise hand button, please. I still see 44 people. Okay, good. I want to see every single one of those 44 people raising their hand, because that was a lot of information, right? Regardless of what phase you're in your FI journey, whether you got enough money to invest, you don't have enough money to invest, you're just starting, wherever you are. I think Elisa addressed all of those phases, and there are different phases, right? Like if you're 23 or 25, maybe you're not in the phase where you have a ton of money, but she told you about ways to make that money happen. So really, guys, no excuses. At the end of the day, you just have to take action. You have to educate yourself and take action. And I'm just taking notes about so many things myself, because I learn so much from Elisa. Every time she does this, she adds a little bit more. I've heard this before, but she adds a little bit more to it. So Elisa, that was amazing. And Elisa runs the Financial Independence University. So if you want to learn more, then go contact her and set up some time. So someone says it seems unrealistic to achieve a passive 200K per year. So I think it's just as realistic as you want it to be. Is that your FI number, Ram? I think that's what you need to think about. It's not unrealistic. It just will take you longer. So one of the things I kind of want to share a little tidbit here, because I found this interesting when I went through it myself, because I was teaching these kids to play a game called cash flow game. If you haven't seen that game, and you should, right? We have a card which says doctor. We have a card that says engineer. We have a card saying, let's say, I don't know, a janitor. You know who can retire faster? It's kind of the janitor, because he doesn't have as many needs. He or she has lower needs and a lower cost of living that they consider as financial independence. So interestingly, if that person works harder to save, they can actually retire the fastest. So I think big part of this question, the why, is that also asking how much do I really need, right? How much is too much, or how little is too little for me to live on? And I find that most of us who've gotten into this trap of saying I could never live without a job have gotten into this place of spending way too much and just saying, okay, this is how I want to live, right? But does that really make them happy is the bigger question, right? But anyway, coming back to some of the things Elisa said, I mean, there was so much there to unpack. I think you can actually think about each one of those points as like an hour you really need to think about, right? Break this down, watch this webinar again, and look at it, apply it to your own life. And I think that is really pertinent here. A couple of things I wanted to kind of give you a little footnotes on: asset protection, estate planning. For those of you who have assets already, that is an integral part of this whole financial freedom, and kind of putting all your assets together, making sure they're protected. I've done several webinars on those. If you go to the Cherry Street Investor Education website, you'll find it. Also, another very key point is about paying taxes. Whichever side of the fence you agree on or don't agree on, or not paying taxes, or how much taxes you want to pay on, the bottom line is you can use that tax dollar to do something better, right? Whether it's save, support your favorite charity, whatever that is. And look up real estate professional for tax purposes. How do you get that designation? There's a zillion videos out there. One of my CPAs actually came in and did a talk on that. So definitely look that up on Cherry Street Investor Education. I believe Elisa also has some information on that.
I have a big giant blog about how to pay $0 on taxes, which is really my personal experience on the using real estate depreciations to kind of offset your active income, which is really powerful. Yeah.
Very powerful. So we are speaking, the two of us are speaking from having done this, right? We're not saying, oh, you should pay zero taxes. But what we are trying to do is say, how can other people pay lesser taxes when they are giving away half their income? Like those folks living in California, expensive states with expensive state taxes, income taxes, and now Biden is increasing all your capital gains taxes to a ridiculous amount. So really, really dig deep and think about where maybe you don't want to live in California, right? So all of these, yes, Sherry, all of the blog articles on the EZFIU, so ezfiuniversity.com/blogs, if you go to the website. So really think about where you're living and whether that's the place. I talk to a lot of investors living in California, and they're like, oh, I pay so much taxes. I'm like, okay, think about it. You don't have to retire in California, maybe. Maybe that's not the best place for you to retire if you don't want to pay 50% in taxes. So I think, Elisa, that was amazing. A lot of things for us all to think about, and hopefully you guys got something out of this. If you're setting your FI number, just remember, sometimes you might have to pare it down to the basics. So one of the things I recommend you do, especially if you're a high earner, right? Like a high earner in a great job, is that maybe you won't achieve a full FI. Like maybe you want to replace your income, but maybe you want to get to the lean FI where your expenses are covered. So when you can go, I mean, trust me, you wouldn't want to quit your job and do nothing. You're going to be bored out of your mind and not know what to do with yourself. Maybe when you don't have to worry about paying bills, you can really focus on what you are passionate about doing, right? Like Elisa and I are doing what we're passionate about doing today because we didn't have to worry about paying bills anymore. So maybe that's all you need to aim for, not 200K a year. Maybe it's 100K, maybe it's 80K in expenses. So think about it differently, and don't always think about replacing your income is my encouragement to you, because When you don't have to worry about paying bills, you're already going to be worrying about doing your life's best work and doing something you're passionate about. And I promise you this, when you're doing something you're passionate about, the money comes. The money simply comes. You're still going to be making money, although you will not feel like you're working because you love what you're doing. And we are both sitting here before you saying that very confidently because that's exactly where we are today.
Yeah,
So,
and I want to kind of address the 2K, 200K of that comments. You can get there because I mean, you can't get there by simply saving, but there is some compound effects that if you did save, 100K or so, 75, that means you were living on 125K. So do you really need that 200K to create a job, right? So, but so I would say I would encourage when people, it's really easy to say, I just want to replace my job and that's my income, right? But if you actually deliberately did your financial planning on your picture day, often people find you don't need that money and you can actually live better quality of life because oftentimes, especially if you live in California, you're paying a lot of money into necessities, which you don't need to have that if you like move to a different location. And then I can tell you, if you live in California, especially the Bay Area, the 90% of the world is your oyster, and that's going to be giving you a better life quality, and it's going to be cost you a lot less. And also you're going to saving money on commute and all that stuff. So it really becomes a active exercising. And also if you're making 200K a year, that means you're really smart. So there's going to be some side gigs that you can launch off where you feel secure to quit your jobs on. So just don't let that kind of like stop you in terms of, oh, is that even realistic, right?
So I want to add to what Elisa said. If you're making 200K on paper, go home and do the math on how much you're really making. What's coming into your bank account every year, every day, every month, after all the taxes and all the expenses and everything else that's happening in your life, right? Like forget your personal expenses, but actually look at your tax net income, right? And I promise you it's nowhere going to be close to that. That's the realization I had when I did Ram. Just to realistically tell you, when I was making over 160K plus another 100K in stocks every year, right? And I had a very good job on paper, but when I did the numbers with taxes and everything, I really didn't. I was making less than 40%, 40% less than what it looked on paper, right? So then I'm going like, okay, if I can create tax-free income, I really am not targeting my job income. I'm actually targeting this lower income. So that changed my perspective completely. And just to give you an idea, I don't know what Elisa's FI number is. I don't really care about sharing it. I'm totally okay. I looked at my expenses and I said 5,000 a month, I can manage my expenses because I knew that I can live pretty frugally. I mean, I was in college and I was living on $1,300 a month, and I was paying 600 of those for tuition, for in-state tuition in Texas A&M. So I have lived on $600 a month. So when it came down to living a very comfortable life for $5,000 a month, I didn't think I would have trouble, and I had passive income exceeding that. So I felt pretty comfortable quitting my job at that point because I knew I wouldn't. I did trim back the first few months because, paycheck is like a drug. It comes in every month and it comes regularly. So it takes time to wean off the drug. So you do get a little worried sometimes whether you can do it, but I promise you, you'll figure out a way. And with income from non-paycheck jobs, it comes in chunks. It doesn't come regularly, but when it comes, it rains, it pours. So you actually end up making a lot more that way than with your job when you look at it from the end of the year perspective. And also because we both don't pay as much taxes, we end up making a lot more now.
Yeah, so I do want to share some numbers with Ram just to kind of encourage him. Like oftentimes, again, I think Ram, I suspect you need to work on this first step, which is like the mindset, and then really understand your numbers over there. So I would say 200K a year. If you're just aiming for replacing 200K a year, then to Kavitha's point, you're probably paying 40% tax rate. So that means that you only need 160 to retire. And then my number was 170 or 160. And I would replace it with fourplexes, and I did 1031. So like one of my property is pulling like $6,000 a month, right? So that combined, it did replace my job. And the thing is, as Kavitha noted before, I was a single income person. And I never made more than 160, 170K. That's gross income. So that actually helped me kind of replace. And then, but the possibility is you always think about grabbing onto your job. And the interesting thing I had shared with all these entrepreneurs I have interviewed was that the moment that you quit your job, you realize, after 3, 4, 6 months that you're at this mode, you realize you were actually missing out on a huge opportunity. Because if you believe in your abilities, you're actually missing out a huge opportunity for you. So we have our income goals to like make $1 million in 3 years, and that's never possible with a W-2 job, right? So like you're kind of making that. And then the important thing is, even after you quit your job, you do an entrepreneur or doing other stuff that maybe not like active stuff that you just challenge yourself. The important thing is also thinking about the investor, your investor first. So all these income that you made, you need to put it into passive investments or investment that you also run so that it's generating more and more and more for you. And then it really easily, if you're making 200K a year, for a lot of combined salary people who are making 400K a year, imagine if you only lived on 150K a year, which is very comfortable to live on, you can go on vacation, all that sort of stuff, and you actually save that 250K into, tax efficient investment vehicle, and you're going to be able to quit within like 2 or 3 years, like no problem to replace that. So I think it's definitely realistic. I think when you keep on asking what that is realistic, is like try to kind of look into your mindset a little bit more to see how you can unblock that, make it possible for yourself. Like
and actually reinforce that. She said mindset is the key. People need to work on their fears and what's holding them back. And Ram, just from your question, I'll tell you, it's your fear. It's not a number. The fear is the problem here, not the number. So it doesn't matter what number you get to, you'll always have the fear. So the way to figure out is talk yourself out of the fear, and don't worry about the number. You are a really smart person making 200K, you'll figure out a way to make it happen. Just trust in yourself. I have a good question, Elisa.
CPA. I think definitely reach out to Kavitha, reach out to me if you want to. There's referrals is probably the best way to find a CPA. The number one referred person I have was my investors, my CPA, because that's a great tax accountant and kind of takes care of a lot of the stuff in your life for you. Yes.
Another question was asked and I answered it offline. Is an S corp necessary to qualify as a real estate professional? LLC sufficient? I just want to say none of those matters. That is just LLC is just for asset protection, Shonil, and S corp is only for how you run your taxes, basically how you're filing your taxes. So neither of them have anything to do with real estate professional for tax purposes. Like Elisa pointed out, she's got a blog on it, and I have a webinar that my CPA has done. So it's directly from the horse's mouth, so to speak, on how do you qualify. So look that up. And for those of you who are married, one of the tips I'll give you is, even if one of the two of you becomes a real estate professional for tax purposes, you will be able to offset all kinds of income with depreciation, including W-2 income, stock market income, every kind of income. So you don't both have to take the plunge, right? You just have to figure out which one of you wants to take the plunge in becoming a real estate professional for tax purposes, and you can let the other person get you health benefits. I'll tell you, health is one of the biggest issues. Health insurance is one of probably the biggest issue if you're self-employed or you start your business. And you can have, if one of you loves your job and actually enjoys it, there's no reason for you guys to quit, right? Have one quit and offset the income of the other. So that's always necessary. But yeah, definitely we'll be talking more about that in future webinars. Go ahead, Elisa. Sorry to
Yeah,
cut you
the
off.
health insurance part is really funny. I think nowhere, once you kind of look into the tax stuff, you really start realizing the rich dad is right on the quadrant, because we kind of talk about, me and Kavitha always brainstorm like, how do we help our W-2 investors save their taxes? And it turns out there's no safe ways to help them save taxes. You can invest in oil, gas, which could be very volatile, or you can buy tax credit and all that sort of stuff. But then as an investor, as a business owner, you have so many more ways to offset your taxes. And the crazy thing over here is that once you reached
Hey everybody, Callie here.
Sorry.
That is, you know, kind of 0% of gross income in your first couple of years of quitting, you may be reaching that level, is that you actually qualify in a lot of state Medicaid, which is crazy, right? Like, you're making all this money, but you're paying zero taxes. Hence, you actually can't qualify for Medicaid. And there's a lot of cheap health insurance option out there. And once I started looking at it, I found this is another trick. Your W-2 job is putting you in there because they put it in this called, was it Cobra? Cobra is the most expensive option that's out there. So by shopping the open market, what I did, in every single plan, even the most expensive one, was only 2/3 of what Cobra cost. So anyway, that's just my 2 cents on, you know, investigating.
Absolutely, 100%. So that's another thing, right? When you are able to tweak your income with depreciation, like let's say I want to pay myself only $30,000 and I want to depreciate and write off the rest of the income, I can qualify for Obamacare credits. It'll cost you $100 a month for insurance, right? If you want to write off everything, you can qualify for Medicaid. So there's just so many ways you figure out how to save taxes. When what Elisa was talking about was the 4 quadrants. I just quickly pulled it up on Google, but you will pay most taxes on the E and S quadrant, which is where you don't want to be, right? Where you want to be is B or I. So we like to be the investors. Of course, we own a business as well, but we kind of take advantage of both of this. And you have to understand that the system is rigged for BNS to pay less taxes. It's not an accident, because when you run a business, you create employment. When you are an investor, you create jobs. So let's say we buy an apartment complex, we create jobs. So what the IRS codes are designed to do is to incentivize those who are creating jobs, not people who are employing themselves, not people who are working for someone. So the code is lopsided and works for the BNIs. It doesn't work for you or me if we are employed, like self-employed and working, for ourselves and not employing anybody, or if we are just having a job. It doesn't work for you. The system is designed to punish people who are on this side and to reward folks who are on BNI. So it's not a loophole. It's not an accident. It's designed on purpose. And another book recommendation I have for you, if you truly want to figure out how to save on your taxes, is this book. And why the code is the tax code is written in such a way to benefit people who are in the BNI quadrant. And Don Wheelwright is actually Kiyosaki's CPA. And this is a great book. I recommend you guys all read to understand how and why you need to move to that BNI quadrant to save on your taxes, and how that will increase, and it'll kind of get your FI goals even sooner than you think you can. Any other questions from folks? Elisa, anything else you want to add?
No, I think we kind of beat the horse to death.
Beat the horse to death. It's been almost 2 hours. So thank you guys for hanging in here. I think we lost a few along the way, but definitely if you're thinking this is not possible, go back and work on your mindset first, because that's the place it starts. So thank you, Elisa, so much. This was amazing as always. And thank you for staying so late and answering all the questions. Hope you guys got something out of it. If you want to go back and watch this, it will be on YouTube tomorrow. So have fun. Have a good night. Thank you again.
Thank you, Kavitha.
Okay. Thanks, Elisa. Bye. Good night. Hi, I'm Kavitha Baratakke. I hope you found this video useful, and if you did, please don't forget to subscribe to my channel so you can get notified of any future videos I upload. I plan to cover a lot of investor education on this channel, and I hope you'll stay with me for it. If you have any feedback on future content you'd like to see me cover, please drop me a note or a comment on my video. Thank you for watching, and thank you for supporting me.